what are investors saying then about the potential for carving Tesla out of this grouping?
Let's get something straight. After today's 25-point drubbing, Tesla is out of the Magnificent Seven. Done. Stick a fork in it. We all know it. People are just afraid to say it. Maybe they worry Elon Musk has something up his sleeve, or maybe they're just scared of the guy, or they just like saying Magnificent Seven all the time, although I bet most of the people have never even seen any of the 3 cinematic iterations. I do not have such trepidation, people. That's because in one earnings report and conference call, Tesla removed itself from this elite group.
Is Tesla about to lose its precious seat at the Magnificent Seven roundtable? Things are getting heated, and right now, Tesla may have to prove its worthiness, particularly at a time like this, when doubts of its true potential abound.
Now, Tesla shares are tanking as the rest of the market rallies, leaving traders to wonder if the EV maker actually belongs still in the grouping of the Magnificent Seven. The problem, of course, for Tesla is 6 of those 7 tech companies benefit from that AI enthusiasm, while EV demand is expected to slow in 2024, making it hard for investors to swallow the sky-high valuation for Tesla. Let's bring in Danny Lee, then, who follows this company very closely for us. Join us out of Hong Kong. Danny, Tesla's had a tough start then to 2024. What, the stock is down about, what, 0.2, a little over 20%, I should say. 0.2 would be fine. I think Elon Musk would take that. But down about 24% year to date, whilst the likes of Meta and, of course, Nvidia are notching up gains of, what, 30, 40% so far just this year. What are investors saying then about the potential for carving Tesla out of this grouping?
Yeah, as you say, Tesla's had a pretty tough start to the year. It's the only Magnificent Seven stock underwater right now, and so when you look at the broader gains across the Magnificent Seven, Tesla's had a really tough start, and it's really all down to the other Magnificent Six. So your Apple, Amazon, Meta, and Nvidia. They've all benefited from having this attraction investors see in artificial intelligence. Now, Tesla doesn't quite have that, and really with the EV growth slowing in one of its key markets, such as the US, investors are clearly looking away and thinking really it's quite doubtful that the valuations, that sky-high valuation currently around $600 billion, can hold.
Remember the days when Tesla, alongside tech giants like Alphabet, Microsoft, and Nvidia, shone brilliantly? Days when they symbolized innovation, growth, and seemingly unstoppable momentum. Well, those days are still around. However, lately Tesla's star has dimmed, with its stock price lagging behind its peers. The ground trembled beneath Tesla's feet as its once unbeatable stock price took a nosedive, sparking a heated debate as to whether the EV maker has lost its spark. The question we now hear is if Tesla should be dethroned from the esteemed Magnificent Seven, the high-flying tech stocks that are dominating the S&P 500. To get a good hold of this topic, let's dive deeper into this electric controversy, looking through the various perspectives and exploring the potential causes of Tesla's recent woes. Let's get started.
Danny, what are the Tesla bulls saying in terms of their optimism for the business? Can Tesla turn around this slump? And it had a very good year last year. Year to date, though, of course, it has faced that pressure. We are focused on that longer term slowdown in terms of the growth of EVs. Are there silver linings here? What is it that is going to be a pivot point for Tesla potentially?
Yeah, I mean, well, just look at 2023, right, when Tesla's shares were up 100%, but after the earnings, the full-year earnings that Elon Musk had given just recently, warning about notably slower growth and also not giving a guidance for 2024, that really shocked investors given how well they performed over 2023, and so that already had started to hit the stock hard, and with all these negative concerns about not just EV growth in the US, but also somewhere like China, which is another key market, that's really hurt the stock. And what I would characterize 2024 being as a year of transition as it waits for the likes of a Cybertruck to ramp up in production and to start delivering in earnings. Also that it's got a new cheaper EV under development that's going to come in late 2025. This is all not going to help in somewhere like 2024 when they're investing more and sales is not going to match up to the heady heights of 2023 in terms of growth. So So therefore, investors are clearly looking, when you look at the valuation right now, and given how high it was, over 900 billion at one point, and last year and beyond that, when valuation is now coming down, how far lower can it go?
Danny, you're sitting there in Hong Kong. You touched on the Chinese market, the importance of the Chinese market and the US market for Tesla's prospects. Is the bigger challenge for Tesla in China the competition, or is it the broader macroeconomic weakness that we're seeing in China? Just the fact that consumers are more constrained in terms of their spending, or is it a combination of the two? What is your assessment in terms of the prospects for Tesla in that market?
I think we have to wait and see how, for example, the Lunar New Year plays out. We saw the first month of monthly sales data, and it was lower across the board for all the EV players. And there is, yes, rising competition, but also as what Tesla executed last year in terms of price cuts, that really has shaken up the market. And you see other emerging, stronger players willing to challenge Tesla financially. And so therefore, Tesla does have a stronger competition. But when you have consumers really rethinking or thinking about sales in the world's biggest auto and EV market, that does put some pressure on someone like Tesla, which has built in the expansion of capacity to capture this growth in demand, which maybe not as good as it once was.
Tesla, the AV pioneer, led by the ever-controversial Elon Musk, is like a maverick hero, disrupting the auto industry and pushing the boundaries of what's possible. The automaker's future growth hinges on the execution and scaling up of production, and if it succeeds, Tesla could revolutionize transportation, making it a high-reward investment. However, despite this interesting growth prediction, there's still a bit of fear that Tesla may not perform as well as is expected. So, what's zapping the company's energy? That's the big question we're about to answer. Hello, everyone, and welcome back to Tesla Tomorrow. The Magnificent Seven is like the tech all-stars shaking up the stock market. Think of them like the Avengers of the business world, each with its own superpower. Of course, Tesla is one of them, zooming ahead with electric vehicles. But there's more to the crew than just Elon Musk's EV maker. First is Apple, the tech giant, with a massive following for its iPhones, Macs, and just maybe everything with a fruit logo. There's also Microsoft, the ones who are now dominating cloud computing and gaming, Amazon, the online shopping king, Alphabet, the search engine giant, as well as Meta and Nvidia. Now, predicting the future of these companies can be tricky. However, analysts are generally bullish on these tech titans, and they expect them to keep growing, driven by factors such as tech adoption, cloud computing, as well as AI and automation. Also, while Tesla is considered one of these big techs, there are claims that the electric vehicle maker may not be worthy to be one of the Magnificent Seven, particularly because of its plunging revenue and stock price. But could this be true? Should Tesla remain a part of the Magnificent Seven? Let's find out. Before we continue, if you like this type of content, make sure to hit that like button, subscribe to our channel, and turn on notifications to stay up to date on everything happening with Tesla. While there's no single culprit in Tesla's falling story, there are a few suspects that stand out in the lineup, and first is the macroeconomic meltdown.
Let's bring in Jason Trenner, Chairman and CEO of Strategic Research Partners. That is a Baird company. A lot of people, Jason, say that we don't need rate cuts because earnings are validating current valuations.
Well, it depends on how you're looking at earnings. If you look at the MAG, we looked at this weekend. If you look at the MAG 7, earnings for the MAG 7 in the fourth quarter were up 59%, roughly. For the S&P 493, they're actually down by about 3%. So the way the index is constructed, the market doesn't look that expensive because those big companies are providing big earnings growth, but it's not evenly distributed. And so, in my opinion, for the entire market, it probably wouldn't be a bad idea to have a rate cut or two, but certainly it doesn't seem to need it right now.
So you didn't have any Doritos and noticed that the bag was only half filled.
Oh, yeah, no, that was, I think
we need rates to go higher to get rid of this shrinkflation.
That was a really positive message on a secular holiday from the president, maybe something a little more upbeat.
You wouldn't worry if they cut, that it's too soon with given the GDP and given the labor?
I'm just being pragmatic, which is to say that Jay Powell has essentially promised people that they're going to cut largely, and they're going to cut as a result. I don't think there's any rush, and I think when our work has shown that once you have one wave of inflation over 6% over the last 120 years, the chances of getting another wave over 6% are about 9 and 10.
Rising interest rates and a global inflation hangover are hitting tech stocks hard, and Tesla isn't immune. To protect their investments, investors are seeking safer havens, leaving growth-oriented companies like Tesla in the dust. Likewise, the competition is heating up. Remember when Tesla was the undisputed king of the EV kingdom? Well, it doesn't seem exactly like it anymore. Legacy automakers like Ford and GM are electrifying their fleets, while nimble startups like Rivian and Lucid are nipping at Tesla's heels. And there's also BYD, which has become a formidable rival for Tesla. No doubt the competition is fiercer than ever, and it's squeezing Tesla's market share and margins. And then there's also Elon Musk's misfires. While the CEO's undeniable charisma initially fueled Tesla's rise, his recent behavior has ignited investor uncertainty. From erratic tweets to controversial acquisitions like Twitter, some argue Musk's actions create unpredictable distractions, casting a shadow over Tesla's stability. But that's up to individual opinion. Amongst all these possible reasons for Tesla's downgrade from the Magnificent Seven, there's one that poses to be a much bigger problem for Tesla, and that is the change in EV demand.
Car buyers are increasingly looking to hybrids as sales of electric vehicles pull back. Hybrids now make up more than 9% of new light vehicle registrations. That's according to the S&P Global Mobility Report. Now, Ford CEO Jim Farley is saying that hybrids will play an increasingly important role in the transition for consumers to go fully electric. On the other hand, Toyota CEO is predicting that pure EVs will peak at 30%, leaving a large space for hybrid cars. Let's bring in our next guest, Michael Dunn, Dunn Insight CEO, to discuss more. Thank you for joining us, Michael. So what do you think is going to be the key 3 factors that will drive hybrid conversion and adoption?
What we're seeing right now is the end of the honeymoon for pure electric vehicles. For the last couple of years, there's been sensational interest in buying electrics like Teslas or your Mach-E's from Ford or your Hyundai Ioniq 5. But what's happened is that consumers have realized, hey, the charging infrastructure is not great on these things. They're expensive, and maybe there's a better alternative. So we're moving into more of a realistic, practical consumer. The first movers, the leaders who would go for those electrics are now moving to mass market. And those consumers are saying, give me something much more practical that I don't have to worry about range or charging. And their solution is to move, exactly as you said, into hybrids. We're seeing a surge in demand for hybrids while demand for pure electric vehicles is slowing.
Michael, it feels weird to talk about hybrids having a moment because they have been around for a while. And you look at a company like Toyota, who for years have said this very issue, that EVs are going to be slow in terms of adoption. Hybrids will be a longer bridge than you expect. How long does that transition look like for you? I mean, does it make sense for a company like GM, for example, to suddenly pivot to hybrids when you consider where the overall EV transition is going?
Absolutely. It's a longer run than most people expected. So we're talking about a 10-year transition before electrics, in Toyota's case, as you said, just 30% of the market. Others are more optimistic. But what's happening around the world is that people are realizing range anxiety is real. Charging infrastructure is not that great, especially here in North America. Prices of electrics remain high. So why don't I just buy a hybrid or a plug-in hybrid? I get something more affordable. I don't have to stress about range, and I can get in. There's a lot of options out there from Toyota, from Ford, from even Chinese companies like BYD. There's definitely competition now in the minds of consumers. Hey, I don't necessarily have to jump to pure electric. I can do very well with a hybrid.
There's been some chatter about a slowdown in EV growth, and we think we know a bit of what's causing this mini bump. First, like I mentioned earlier, is the higher interest rates. Loans ain't as cheap as they used to be, and that applies to car loans too. This can make even the most fuel-efficient rides seem a bit pricier. Also, there's currently a lot of economic jitters, and when people are worried about the future, they tend to tighten their belts, and big purchases like new cars can get put on hold. And let's also remember the chip shortage that messed with everything, from phones down to toasters. It's still causing headaches for EV production, meaning there'll be fewer cars on the road. But hold on, don't hit the panic button just yet. Before we hit the brakes on that EV demand diminishing narrative, let's bear in mind that it's not quite as clear-cut as some headlines make it seem, because there are still a few things that Tesla and the EV market can benefit from. One is government incentives. At the moment, many countries are offering juicy incentives like tax breaks and charging station investments to keep the EV love flowing, and this is a good opportunity for Tesla. Also, battery technology is constantly improving, which means cheaper, longer-range EVs on the horizon. This particular factor could promote road trips without range anxiety, and of course, there's the variety that EV provides. Automakers are churning out new EV models left and right, catering to different tastes and budgets. This way, there's an electric vehicle for everyone, from zippy city cars to family-friendly SUVs. So while the EV market might be taking a breather right now, it's definitely not out of gas. Remember, this is a marathon, not a sprint. The long-term trend for EVs is still heading upwards, fueled by environmental concerns, technological advancements, and let's not forget the coolness factor of cruising around in a silent, emission-free machine. So we think the EV revolution is still rolling, and it's going to be an electrifying ride. And so, for these reasons, despite the recent slump, Tesla still boasts impressive credentials. The automaker remains the undisputed leader in the electric vehicle market and holds a significant advantage over its competitors. Tesla also continues to push technological boundaries with advancements in self-driving technology, charging, and gigafactory automation, keeping them ahead of the curve. We won't also forget to mention that despite the controversies, Musk's undeniable vision and his ability to rally resources remain significant advantages for Tesla. And Tesla's ambitious projects like the Cybertruck and humanoid robot Optimus keep investors and fans captivated, offering glimpses of a potentially game-changing future.
And then there were 6. Ooh, that's how I'm feeling about the magnificent ones. The 7 stocks who reminded people of the fabulous movie where 7 of our most badass gunfighters went to Mexico to save a village from some cynical, vicious bandits. But that little Magnificent 7 moniker may have reached the end of the line, because alas, not all 7 are still magnificent. I think it's time to accept that Tesla has been shot. Not unlike Harry Locke, the first gunfighter to go down in the movie. And we either need to rename the group or perhaps the Super 6, maybe? Or search for a replacement. Get a 7th. Yep, on a sedate day where the market, was Dow gained 138 points, S&P advanced 0.22%, both to record highs. NASDAQ climbed 0.32%. I think it's time that we think for a magnificent reshuffle. And I don't do this easily, because you know I respect the work of Elon Musk.
So should Tesla be downgraded or remain one of the Magnificent 7? Well, the answer hangs precariously in the balance. However, while the recent performance of Tesla stock raises concerns, Tesla's strengths shouldn't be underestimated. So here's how we think the debate might unfold. First is the call to demote Tesla. This group may argue that Tesla's inflated valuation doesn't reflect the intensifying competition and slowing growth, and they may also point to companies like Nvidia, with stronger fundamentals and a wider range of products, as more deserving members of the Magnificent 7. And second is the group that wants to keep Tesla on the throne. This side believes in Tesla's long-term vision, its brand power, and Musk's ability to innovate. They see potential catalysts like new car launches, improved profitability, and successful execution of ambitious projects, boosting Tesla's potential and reigniting investors' confidence. Whether Tesla retains its place in the Magnificent Seven remains to be seen. But we're certain that the coming months will be crucial, with factors like economic recovery, competition's progress, and Tesla's own execution playing decisive roles. What we know is that the tech landscape is dynamic, and Tesla's journey promises to be anything but predictable. So buckle up and let's watch as it all unfolds. But what do you think? Should Tesla remain a part of the Magnificent Seven? Let us know your thoughts in the comment section. If you would like to know what Tesla has been up to these past few days, go ahead and click on the next video on your screen. See you there.